I gave you the quads. We invented the quads, and it is my job to get you through what I think is going to be the mother of all-time highs. We already made that call. This is what it's going to look like. So the chart on the S&P 500 and Nasdaq, which is like this, is going to go like this. You are here. Now, by the time we get to there, give me 3 to 6 months of time and space. I'll start giving you some, like, what the market gives me, or not. May or may not happen. You know, you call somebody on the old wall, and they're going to tell you with no timing that that's going to happen, with no quads. Then, when you hit quad 4, from the highest level you've ever seen, you're going to have something like that. Very technical outlook. I didn't want to go too high level there, but that's what I'm thinking. Okay, quad 4, we have it in Russia, we have it in South Korea, we have it in the USA. Okay, see that Russian trading system breakdown again and again and again. And some people say, okay, well, it's the Ukraine. What does a country do when it's slowing economically? Yeah, some of them start wars. You know, so you can say whatever you need to say. The fact of the matter is that we have it on the board as a short. Those 3 countries, if you go to slide 20, Eric, you can see that those 3 countries have one thing in common, which is they have back-to-back quad 4s in the first half of the year. Quad 4 market is looking ahead to what? The quad we're going to be in. So again, quad 4 in Q2 is deepening as oil stays higher. Got that? Write it down. All right, that's point number 1 this morning. And yes, a wonderful buying opportunity, as you know, for if you're not watching this for free, you know that I was waiting and watching on buying things like 2-year notes, treasuries, again, across the curve, not just 2s, gold, you know, waiting for this Fed mistake, and we're certainly getting a wonderful buying opportunity on that today. Now, don't buy things that are crashing. If it's crashing, if it A says bearish trend on your pin sheet, and B has a lower low in the range, and C is already crashing, don't be that guy. Crashes. We saw it again in South Korea last night, down 3.5%. If you look at South Korea, obviously that's in quad 4 back-to-back. If you go down the line, you can see back-to-back quad 4s in Q1 and Q2 are in Russia. Its stock market has crashed. Again, down more than 20%. The Russell 2000 in short order will be down 20% or more from its cycle peak. I think the Nasdaq's going to crash too. It won't take long. So again, when you look at the futures, don't have an emotional reaction to that. It's not about the color coding or the cheering. It's about understanding where the puck's going next. Point number 3 this morning, gold. Buy it. Just buy it. You know, I don't know what else to tell you. If you don't want to learn about quads or it's confusing or quad 3 to quad, buy it. Got it? Buy it now. Buy gold now. You don't always get the low end of the range, but when you do, you buy it. Okay? So again, that's what we're looking for here. Top end of the range. We'll see if the 10-year yield starts to come down, but we're certainly at the top end of the range on 2s here, and that's why gold is getting upset for a day and a half. That shouldn't upset you. It's a buying opportunity. And for those of you that remember, at this time last year, I was saying sell it. Every time I told you to sell gold last year on the short side, it worked. Yesterday was a wonderful short selling opportunity in number 1 today of the top 3 things. Let's get into it. Shorting Qs, it says it right in the top of the early look. I don't know if I've ever written that before. If I did, it was back in 08 after a mother of a bear market bounce. And that's what you get in bear markets, are big bounces. But again, implied vol is minus 23% versus 30-day realized, which is a huge signal in as much as the Q's only having like 1.5% upside. So now they have like 6, 7, 8% downside. Yeah, that's it. I mean, you think they're down now. I mean, let's give this a week or two, and that is what it is. What does this do? It cements the expectation that the Federal Reserve is going to make a policy mistake. I've said this enough times. This cements it, okay? 7.5% year-over-year CPI is not a number that the Fed can execute on. And again, it's their fault. Don't give me this bullshit about how, oh, they got to do it. They got to do it for America. The bond market had been raising interest rates for the Federal Reserve for basically a year. They're going to wear it. They're going to do it, and we'll see if they do it again and again and again. 5 times. I dare you to raise them twice, okay?
Oil, it harkens back to when I started Hedgeye in 08, and it was like March and then going into the spring that you had this, pardon the pun, but a proverbial March higher in the oil price. So it just made it a lot easier for me to make a quad 4 call. You don't have 110, 120, 100. In that case, they got to $140 oil Front running our own model, we already have a deep quad 4 scenario in Q2. Now it is definitely with 100% certainty going to be deeper.